Thank you for joining us for today's webcast on implementing IFRS 19, Subsidiaries without public accountability disclosures. My name is Michelle Sansom. I'm the Technical Project Director at the ISB that led the project developing IFRS 19. And I'm joined today by three members of our Global Preparers Forum, Ian, who is the Chair of the GPF and also the Head of External Reporting, by Ernesto, who is an Accounting Policy Advisor, and by Amrita, who is Vice President of Technical Accounting. I'm also joined by two of our board members, Bertram Perrin, who was a former preparer and co-chairs the GPF meetings, and by Jing Chao, who worked closely with the project team developing IFRS 19. Today's webcast will talk about implementing IFRS 19. The board developed IFRS 19 in response to calls to help simplify the preparation of subsidiaries' financial statements, whilst maintaining their usefulness to their users of financial statements. So let me first turn to Amrita and ask her if she might share some insights into IFRS 19 within her group.
Thank you, Michelle. I'm from India. My company is listed in India as well as in the US. We have close to 100 plus subsidiaries across the globe, and each of these subsidiaries follows their respective GAAP. So what goes on as a part of our regular reporting requirements is every quarter these subsidiaries send their reporting pack, the consolidation pack, which we utilize. And apart from this, every subsidiary also prepares their annual statutory financial statements, which goes as per the local GAAP. So at any point of time, we are looking at two distinct gaps which are going on, one for the consolidation purposes and one from a statutory local GAAP perspectives.
Thank you. Ernesto, is that similar to you?
Yeah, very much. I work for a large energy company. This is in the UK, and we have operations in around 70 countries across the world, and hundreds of local entities. Same thing, they report under IFRS for group purposes, and then for statutory purposes, they need to apply, or they will apply local GAAP in general. And that's a lot of work. We manage that from shared service centers centrally, so the reporting is not done in country, and that means that we need to capture a lot of knowledge on local gaps in those shared service centers. And given the number of countries that we are in, that is a lot of knowledge to be included.
And Ian, you have spoken before about the benefits of IFRS 19. Do you want to add anything?
Yeah, I mean, our organisational structure, I work for a large healthcare company based in Switzerland. We have around 200 affiliates pretty much globally. We also have a shared service centre structure, and all of our affiliates, their underlying general ledger is maintained in IFRS for group reporting purposes, and then if they need to do local GAAP for statutory, they have to do a local accounts conversion, and then you need that expertise in the shared service centre or whatever. So if the local affiliates can use IFRS locally, this is really a big win for us in terms of efficiency and actually consistency of what we're doing. And that's where I think IFRS 19 is really a big help in that.
Yes, and that was one of the board's aims, to really bring those benefits. Amrita, would you like to mention any of the benefits that your group perceives?
Yeah, sure. So I would sort of classify the benefits into three main buckets. One is, of course, as I mentioned, having a duplicate set of financial statements is going to, that time and efforts on that is going to get reduced drastically. So that's going to be very beneficial. There would be one-time cost which would be incurred by way of transition, but again, as I mentioned, it's a one-time cost, and it's in the long run that's going to be beneficial. So that's a great thing. And third and most important thing, trying to reconcile the local GAAP to the IFRS financial statements and have a team do that on a regular basis. That's also a tremendous amount of saving that I see.
Ernesto, would you see?
Yeah, it's very similar with us, of course. I would like to add one point, and that is the knowledge that you need in your organization would be limited just to IFRS 19, and no longer to all those tens of local gaps. It's not required any longer to keep the knowledge, to renew the knowledge. So that would be an important one in terms of efficiency. Also, usually we are using templates to draft financial statements. Now you have to draft all kinds of different templates depending on the local GAAP. And that means we could go, and that's the environment, you could go to one single template to be used for all statutory financial statements.
That was, the main reason the board were looking at this project, to avoid that duplication of accounting. I think, Ian, that was something that you've previously mentioned as well.
Yeah, I think it's the more you look through this standard, actually, the more you can see what the benefits are. I came across another one the other day, is the OECD Pillar 2 tax reporting, which actually, to do that, you require IFRS on the local affiliates. And if you haven't already got IFRS locally, it's going to be a bit of a challenge. So actually, anything that it makes it easier for people to use IFRS globally, it's going to help you when you get around to addressing country-by-country reporting and the requirements there. So it's really, there's a lot of gains from this, and actually we maybe haven't even realised them all yet.
Well, that would be great news, make it feel even more worthwhile. And so I wonder if you, as a group, have started thinking about implementation or anything around transition yet? Yeah.
Well, very preliminary. I think the very first key item is, of course, that local governments, local authorities allow the use of IFRS 19. So that's the first thing. And as soon as we have sufficient scale in terms of countries where it's allowed, then we can start implementing the first phase. Second point would be IFRS 18. So as soon as we have implemented IFRS 18, then we will or may apply IFRS 19, because otherwise we would apply IFRS 19 now, and we have to change the profit and loss account and primary financial statements again after the implementation. So you will have two implementations. So first local authorities, and then application of IFRS 18, and then 19 will come in. So I'm looking at least 2-3 years likely that we will really implement.
Jingqiao, that was one of the issues the board discussed when it was developing the two standards simultaneously. I don't know if you want to add how we've addressed.
Yeah, I think you raise a very good point. When we develop IFRS 18 and IFRS 19, particularly when we set the effective date and whether we should set different effective dates for IFRS 18 or IFRS 19. And finally, we decided we set the same effective date, that's January 1st, 2027. And that is because applying IFRS 18 obviously will add additional burden to the preparers. But in the meantime, if the preparer can apply IFRS 19 at the same time, it can reduce a little bit burden or cost for the preparers. So I agree with you. Our expectation is that preparer can apply both standards at the same time. So there is they can gain the benefits arising from applying IFRS 18, but in the meantime also provide useful information to the users.
Yeah, thank you.
Thank you.
I wonder, in your planning and thinking around IFRS 19, whether you have any particular points that have come up that you might like to ask Bertrand or Jingqiao.
Yeah, so one of the things which I think would be important to sort of assert is that when companies adopt the IFRS 19, would they be able to make an assertion that their eligible subsidiary has complied with the IFRS accounting standards?
Yeah, I think it's a very good question. Actually, we have been asked by the stakeholder repeatedly when we developed IFRS 19. I think the question is actually relevant to the eligible subsidiaries which are currently applying full IFRS accounting standard, but they would like to choose to apply IFRS 19. Also, it's relevant to the eligible subsidiaries currently are not applying IFRS accounting standard, but they would like to move to apply IFRS 19. So what kind of compliance statement that they should make in the notes to their financial statement? So I think first of all, obviously, if an entity chooses to apply IFRS 19 to prepare their financial statement, in the meantime, they also comply with IFRS accounting standard, all the applicable requirements beyond the reduced disclosures included in IFRS 19. Obviously, that entity should make an explicit and unreserved statement of such compliance in the notes of their financial statement. So this is the first point. Second point, obviously, the entities applying IFRS 19 is different from the disclosures they included in the financial statement is different from those entities without applying IFRS 19. That's apply for IFRS accounting standards. So in order to make this kind of distinction, as part of the unreserved statement this company made, they should make it clear that they apply IFRS 19 in order to provide useful information to the users to help them to make distinction between the company applying IFRS 19 and the company without applying IFRS 19. That is also very important information in terms of compliance statement, which information should be included in the compliance statement. Thirdly, that if an entity apply only IFRS 19 or apply IFRS 19, in the meantime apply local GAAP or partially apply the requirement included in the IFRS 19, obviously this company should not make compliance statement say, oh, I comply with IFRS accounting standard, unless the company actually apply IFRS 19, in the meantime apply all the applicable requirements included in other IFRS accounting standards. So I think that's the 3 points I would like to mention in terms of compliance statement, particularly provides transparent, useful information to the users. Thank you.
Thank you. Minister, have you come across any points that you might like to raise?
Yeah, on comparative periods. First year of implementation, well, all clear on IFRS 19, but what do we do with the comparative period?
So the comparative periods is a good one because I think we got the board to a good position, because if it's your first time applying IFRS 19, and you only have to give comparatives for the information that's in the financial statements. So if you did IFRS last year and you got disclosures that have been reduced, they're not there, you don't have to provide those comparatives. So I think that was a good outcome. Emerita, was there anything else?
So 2 new standards have been out for public consumption, the 18 and 19. I just wanted to understand what's the interplay. Can you adopt IFRS 19 before we have adopted IFRS 18?
Can I answer this
yes,
question?
Please.
Okay. I think the answer is very simple. Yes, but I think obviously the key issue is about what kind of disclosure requirement the company needed to provide, needed to comply with. If they choose to earlier adopt IFRS 19 before IFRS 18. As I mentioned before, that obviously we have set same effective date for IFRS 18 and IFRS 19, but earlier application actually is permitted. So if there is an entity, eligible entity, subsidiary would like to apply IFRS 19 first because they would like to gain the benefit through applying IFRS 19 before applying IFRS 18. I think it's reasonable. It could happen if a large company do have large number of subsidiaries without public accountability. And in our IFRS 19 currently, we do have a subsection related to the IFRS 18. But the problem is that IFRS 18 has not become effective for this company because they would like to apply IFRS 19 first. So in this case, what kind of disclosure requirements should they should have in relation to the IFRS and 18 related disclosure? I think the key issue is that actually those companies needed to apply the reduced disclosures based on IAS 1 rather than IAS 18, because IAS 18 has not become effective for those entities. And in our standard, ISB did consider this situation, so we include those reduced disclosures requirement based on IAS 1 in the Appendix B of IFRS 19. So in this case, if an entity would like to apply IFRS 19 before IFRS 18, they need to apply the reduced disclosures included in Appendix B of IFRS 19.
Thank you. I think the board did a really good job because it means you can apply 19 before 18 and just use the appendix. But maybe I'm a bit biased. So, Ernesto, were there any other points that you would like to bring up on the standard?
Yeah, how does IFRS 19 work in conjunction with other IFRS standards? So you talked about IFRS 18, IS1, but given that IFRS 19 is a disclosure standard, how does it relate to other standards that we should apply?
Maybe I can answer this,
Yes,
this question. So let me first explain the structure of the standard. The first part of the standard is an explanation on how the standard would work when applied by a subsidiary. Then we have a set of disclosure requirements, and then there is the appendix Chin-Chao referred to that entails disclosure requirements in relation to IS1. The second thing I can mention is subsidiaries will apply disclosure requirements in IFRS 19, but will apply recognition and measurement requirements in all other IFRS accounting standards. The disclosure requirements in IFRS 19 I referred to earlier, they will be organized in subsections, i.e. by accounting standards. There are also in situ paragraphs in other IFRS accounting standards to consider. And last but not least, the fair presentation requirement in IS1 that will be maintained in IFRS 18 continue to apply. It means that if an information is material for investors, then the entity is required to disclose the information even if there is no specific disclosure requirement attached to this specific information. Hope it answers your question.
Absolutely.
I think that requirement's a really important requirement in terms of making the whole standard and the group of IFRS standards fit together, so we have that requirement in IFRS 19 as well. Ian, was there anything that has arisen in your groups?
Yeah, maybe a practical question, because obviously IFRS 19 is to some extent hitting a moving target. While the standard was being developed, the ISB was in the meantime issuing new standards. So I think what's in the final standard is based on IFRS, I think, as it was in 2021. But in the meantime, you've issued new standards, amendments to other standards. So maybe the first question is, how do you propose to sort of catch up, if you like? And then secondly, once that's been done, going forward, when the ISB issues new standards, how are you going to deal with IFRS 19 issues going forward?
Maybe I can answer this question too.
Yes, please.
Very good question, indeed. So the ISB, in developing IFRS 19, considered and reduced the disclosure requirements for IFRS accounting standard as of 28 February 2021. So you're exactly right in the date. All the new and amended disclosure requirements as from this date that were published in IFRS, so from 28 February 2021 and the issue date of IFRS 19 back on 9 May 2024, will apply in full without reduction for the moment. For the moment, because we will publish a catch-up exposure draft that will consult on how to reduce these new these new disclosure requirements, and it is expected to be published in the second half of 2024 for consultation. In the future, on an ongoing basis, the ISB will update the standards when each new or amended IFRS accounting standard will be issued, and there will be consequential amendments to IFRS 19, setting out the reduced disclosure requirements for those new IFRS disclosure requirements in full IFRS accounting standards.
Okay. So once we've caught up, then it'll run synchronously.
Exactly.
Okay.
We would encourage yourselves to respond to the exposure draft, which we expect to see in the earlier part of the summer this year. So I'd like to say thank you for participating in today's webcast and to help explain your organisation's journey towards the adoption of IFRS 19. We will, as the board members and staff, be continuing to monitor and work with the agencies that will be adopting the standard and endorsing the standard, and we would encourage yourselves. So I hope you found today's webcast useful, and thank you very much. Thank you very much.
Thank you.
Thank you.
Thank you.